Walk into almost any Jeep dealership in America today and look at the sticker price. $72,000 for a Grand Cherokee, $82,000 for a Ram 1500, over $110,000 for a Wrangler Rubicon. If you've wondered why cars got this expensive, why the middle class is being priced out of vehicles built for the middle class, the answer isn't inflation, it's structure. Stellantis didn't raise prices to build better vehicles. They raised prices to hit a number, and that number just cost them $43 billion. To understand how a company this size could lose that much money that fast, we have to go back to the moment it was created. The merger that built Stellantis also built the mechanism that would destroy it. The merger. 14 brands under one roof, one corporate layer controlling all of them. Jeep, Ram, Dodge, Chrysler, Fiat, Peugeot, Opel, Alfa Romeo, Maserati, and 6 more. The logic was consolidation. The result was a system that could generate $18 billion in profit, and then lose more than double that amount in under 2 years. The merger was signed in January 2021, Fiat Chrysler and France's PSA Group. 2 companies that had been struggling independently for years. Global scale, shared platforms, combined supply chains. On paper, it was the 4th largest automaker in the world, and for a moment the numbers confirmed the theory. $189 billion in revenue by 2023. $18 billion in profit. Wall Street celebrated. The CEO made over $38 million that year. Everything looked like success, but the same centralized structure that produced those numbers also produced the mechanism that would destroy them. And the first sign was already on the lot. If you find it interesting how corporate structures hide what's really going on, subscribe now, because this story keeps going in ways most coverage missed. The pricing mechanism. The mechanism was centralized pricing. Stellantis controlled pricing across 14 brands from a single corporate layer, and that layer made a simple assumption. If customers love the brand, they'll pay whatever we charge, so prices exploded. A Ram truck over $80,000, a Dodge SUV pushing $100,000, a Jeep over $110,000. These aren't luxury vehicles, they're built for the middle class. And the middle class didn't follow the assumption. If you've bought a car in the last 3 years, you've seen this. Dealerships with fewer customers, sticker prices that don't match the vehicle on the lot, the experience of walking into a showroom and realizing you're not the target anymore. Sales collapsed. Ram down 26%. Jeep down 19%, Dodge in free fall. The structure didn't self-correct. Centralized pricing without demand feedback never does. Every quarter of record revenue pushed them further from the actual market. The system accelerated in one direction. And that difference between the price they charged and the value they delivered cost them everything. The EV gamble. But here's where the system becomes interesting, because the same leadership that centralized pricing was simultaneously placing a $30 billion bet on a market that didn't exist yet. The strategy was called Dare Forward 2030, full electrification across the portfolio, billions committed to EV platforms, battery plants, and retooling factories. The logic seemed sound. Every major automaker was moving in that direction. Governments were mandating it. But Stellantis misunderstood their own audience. Their customers didn't want electric muscle cars. They wanted combustion engines, loud, raw, mechanical. So Stellantis killed the challenger, the Charger, replaced them with EVs that sat on lots for months. Dealers couldn't move them. Inventory piled up. Massive discounts followed, which further damaged the pricing structure they had just spent 3 years inflating. And there was a third structural force, one that made both of these errors impossible to correct. The Chinese pressure. Stellantis was committing 30 billion. Stellantis raised prices to protect profits. A different structural force was building on the other side of the world. Chinese manufacturers. BYD, MG, NIO. Scaling EV production at price points Stellantis couldn't match. Not because they were better, because their structure was different, vertically integrated, state subsidized, built for volume, not margin. Stellantis raised prices to protect profits. Chinese manufacturers lowered prices to capture market share. 2 opposite strategies, 1 market, and only one of them would survive contact with reality. 2 structural errors running simultaneously, both feeding the same collapse, and a third, one that made the first 2 impossible to correct. And this is where most coverage stops, at 2 bad decisions. But the real story is why the same structure that created $18 billion in profit made the collapse mathematically inevitable. If you want to see that mechanism, subscribe, because this is where it gets interesting. The collapse. To understand why the collapse happened this fast, you have to see what the structure actually did. When pricing alienated customers and the EV pivot missed demand, the response wasn't to change the system. The response was to cut costs. Layoffs across factories. Morale collapsed. Quality dropped. Jeep, a brand built on reliability, started failing. Breakdowns. Recalls. 200,000 hybrid vehicles recalled over fire risks. If you owned one, you already know this. Trust disappeared. Meanwhile, billions were spent on stock buybacks, propping up share prices while the underlying business deteriorated. The same mechanism that generated $18 billion in profit, centralized control across 14 brands without demand feedback, made the collapse mathematically inevitable. By 2024, revenue was down 27%. Profits cut in half, market share fell from 12.5% to under 8%. Stock price collapsed 50%. Dealerships overflowed. Cars sitting for over 140 days. On December 1st, 2024, the CEO resigned. Same structure, same outcome, every time. But there's one detail that makes this collapse different from every other, and it's the reason it happened this fast. If you see these patterns, subscribe, because there's always another one coming. Immediately, over $40 billion lost. A $26 billion write-down on the very EV assets they had just built. The system didn't break by accident. It performed exactly as its structure dictated. Centralized pricing accelerates until the market pushes back. And when the market pushes back on 14 brands simultaneously, the correction isn't gradual. It's absolute. The aftermath. A new CEO stepped in. The strategy reversed. Bring back combustion engines, lower prices, rebuild the brands that the previous system had hollowed out. On paper, the correction makes sense. But structural damage doesn't heal with a policy change. Trust takes years to rebuild, and customers who were priced out of their own brands don't automatically return. They found alternatives. Ford, Chevrolet, Toyota, Subaru, brands that hadn't abandoned the middle class. On forums, former Jeep owners described the moment they switched. Not because they wanted to leave, but because the brand left them first. Quality collapsed. Prices stayed high. And loyalty only stretches so far. And if you're wondering whether your brand might be next, the structure that broke Stellantis isn't unique to Stellantis. And here is where the pattern reveals itself. Because the same centralized pricing structure still exists, the same 14 brands, the same single corporate layer. The mechanism that created the collapse is still in place. They changed the CEO. They didn't change the system. And until the system changes, the pattern repeats. The pattern. This wasn't bad luck, it was structural. When a single entity controls pricing across 14 brands without demand feedback, the system doesn't self-correct. It accelerates in one direction until it breaks. Stellantis didn't invent this pattern. It's the same architecture behind every consolidated industry that prices itself away from its own market. The only question is, who breaks next? There's another company, larger than Stellantis, making the exact same structural error right now. If you want to see how that story ends, subscribe. Because design matters. Structure matters. And when those two don't align, even a $200 billion empire can't save itself.